Silver just did something it hasn't done in 44 years. And if you missed it, you need to pay attention right now. Just this week, silver prices shattered through $64 per ounce, a level not seen since the infamous Hunt brothers tried to corner the market in 1980. We're talking about a 120% gain in less than a year. From $29 in late 2024 to $64 today as we head into 2026. But here's what Wall Street isn't telling you. This isn't just another rally. This is a supply crisis meeting a perfect storm of demand. And if history is any guide, we might only be at the beginning. Stay with me for the next 10 minutes because I'm going to show you exactly why silver is repeating 1980, why this time could be even bigger, and what it means for your portfolio heading into 2026. Let's dive in. To understand what's happening right now, we need to go back to 1980. The Hunt brothers, Nelson Bunker Hunt and William Herbert Hunt, two Texas oil billionaires who decided to do the unthinkable: buy up as much silver as they could get their hands on. They believed silver was undervalued. Sound familiar? Between 1973 and 1980, they accumulated over 100 million ounces of physical silver. They bought futures contracts. They took delivery. They squeezed the market so hard that silver went from $6 an ounce in 1979 to $50 in January 1980. That's a 733% gain in 1 year. Let that sink in. But then came Silver Thursday, March 27, 1980. The COMEX changed the rules. They implemented emergency measures to limit trading. The Hunt brothers couldn't meet margin calls. The price collapsed. Fortunes were wiped out overnight. Now fast forward to today. We're seeing silver hit $64, higher than even the Hunt brothers' peak when adjusted for inflation. But this time, it's not two billionaires squeezing the market. This time, it's something far more powerful: fundamental supply and demand. And unlike 1980, there's no easy way to shut this down. Here's why. The forces driving silver today aren't speculative, they're structural, and that changes everything. Here's the reality that's driving this rally. Silver is in its 5th consecutive year of supply deficit. Let me break that down. A supply deficit means the world is consuming more silver than it's producing. And this isn't a small gap. According to the Silver Institute's latest report, the global silver market faced a deficit of 215 million ounces in 2025 alone. Think about that. 215 million ounces that the market needed but couldn't find. That's like trying to fill an Olympic swimming pool when the tap is running dry. And it's getting worse. Why? 3 massive reasons. First, mine production is stagnant. Major silver-producing countries like Mexico, Peru, and China haven't brought significant new mines online. Exploration has been underfunded for years because silver was stuck below $30 for so long. You can't just flip a switch and produce more silver. It takes 7 to 10 years to open a new mine. That means the supply shortage we're facing today, it's locked in for the rest of this decade. Second, industrial demand is exploding. And here's where it gets crazy. Silver isn't just a precious metal anymore. It's a critical industrial commodity that modern civilization can't function without. Solar panels require silver for conductivity. Each panel uses about 20 grams. With the global push for renewable energy, solar demand alone consumed over 200 million ounces in 2025, a 15% increase year over year. And that's just solar. Add electric vehicles, 5G infrastructure, medical devices, electronics in everything from your smartphone to military equipment. Silver is in everything. And there's no substitute that works as well without destroying efficiency. Third, investment demand is roaring back. After years of neglect, investors are waking up to silver. ETF holdings have surged. Physical bullion sales at the U.S. Mint hit levels not seen in a decade. Retail investors, institutional funds, sovereign wealth funds, everyone wants a piece. And here's the kicker. Above-ground stockpiles are being drawn down. The silver that was sitting in vaults for decades, it's being depleted. The COMEX warehouses have seen withdrawals accelerate dramatically. We're not just running out of new silver. We're burning through the old silver too. That's a red flag the size of Texas. Now you might be thinking, okay, but didn't silver crash after 1980? What makes this different? Great question. And the answer is everything. 1980 was a speculative squeeze. Two individuals manipulated the market. When regulators stepped in, the game was over. What we're seeing now heading into 2026 is a structural crisis. This isn't speculation. This is math. Supply is down, demand is up, and the gap is widening every single year. Let me give you the details that matter. In 1980, industrial demand for silver was minimal. Today, it accounts for over 60% of total demand. Back then, if silver prices spiked, industries could find substitutes or just wait it out. Today, good luck replacing silver in a solar panel or an EV circuit board without tanking performance. These aren't luxury items. These are government-mandated technologies. Countries have legally committed to net zero emissions. That means solar panels aren't optional, they're mandatory. And every single one needs silver. In 1980, central banks weren't buying silver. Gold was the monetary metal. Silver was industrial. Today, there's growing chatter about silver as a monetary metal again. Countries are diversifying reserves away from the dollar. Gold gets the headlines, but savvy players know silver is gold's little brother with bigger upside. And here's the big one. The Hunt brothers had to sell. They were leveraged to the max. When prices fell, margin calls forced liquidation. It was a house of cards. Today's buyers? They're taking physical delivery. ETFs are backed by real metal sitting in vaults. Sovereign buyers aren't selling. This demand is sticky. It's not going anywhere. The 1980 crash happened because the foundation was rotten. The rally we're witnessing right now is built on concrete, reinforced with steel. But let's zoom out even further, because silver isn't moving in a vacuum. There are massive macro forces at play here, forces that most people aren't even aware of. Number 1, inflation hedging. Despite central banks claiming victory over inflation, people aren't buying it. Real inflation, the stuff you feel at the grocery store, at the gas pump, at the rent check, is still elevated. And when inflation runs hot, precious metals shine. Silver is the people's gold. It's more affordable, more accessible, and historically, it outperforms gold in percentage terms during bull markets. When gold goes up 50%, silver goes up 100%. That's the pattern. Number 2, de-dollarization. The world is slowly moving away from the US dollar. China, Russia, BRICS nations, they're settling trade in local currencies, in gold, and increasingly in other hard assets. Silver fits perfectly into this narrative. It's money that governments can't print. It's been a store of value for 5,000 years. And as trust in fiat currencies erodes, silver becomes more attractive. This isn't conspiracy theory. This is happening in real time. Number 3, green energy mandates. Governments around the world have committed trillions to green energy. The US Inflation Reduction Act, the EU's Green Deal, China's carbon neutrality goals. All of this requires silver, lots of it. And it's not optional. These are legal mandates backed by the force of law. Solar installations are projected to grow by 30% year over year through 2030. Every single panel needs silver. Do the math. That's an additional 100 million ounces of demand per year just from solar alone. Where's that silver going to come from? Nobody knows. Number 4, geopolitical instability. Wars in Eastern Europe, tensions in the Middle East, US-China rivalry heating up. When the world gets messy, money flows to safe havens. Gold and silver have been safe havens for 5,000 years. That's not changing. And finally, number 5, the gold to silver ratio. Historically, silver trades at about 15 to 1 against gold, meaning 15 ounces of silver equal 1 ounce of gold. Right now, even after silver's massive rally, that ratio is still above 40 to 1. If silver just mean reverts to historical norms, we're talking about prices north of $100 per ounce. And if we get a real squeeze going into 2026, $150 isn't out of the question. Now, I'm not here to pump silver without giving you the full picture. So let's talk risks, because they're real. Risk number 1, regulatory intervention. Just like 1980, if prices spiral out of control, exchanges could change margin requirements, impose position limits, or halt trading. It's happened before. It could happen again. Governments don't like markets they can't control. Risk number 2, economic recession. If we hit a severe recession, industrial demand for silver could tank. Factories shut down, solar installations pause, EV production slows. Demand craters, prices follow. That's the cycle. Risk number 3, substitution. While silver is hard to replace in many applications, technology evolves. If researchers find a cheaper alternative for solar conductivity or electronics, silver demand could soften. It's unlikely, but it's possible. Risk number 4, a supply surge. If silver prices stay elevated long enough, mining companies will ramp up production. New mines will open. Recycling will increase. Eventually, supply catches up and prices stabilize or correct. That's how commodity markets work. These are real risks. Anyone telling you silver only goes up is lying to you. But here's the thing. Even with these risks, the fundamentals are stronger than they've been in decades. And the risk-reward profile, it's heavily skewed to the upside. That's why smart money is paying attention right now. So what do you do with this information? How do you position yourself heading into 2026? If you're a long-term investor, consider allocating 5 to 10% of your portfolio to precious metals. Silver can be part of that. You can buy physical bullion, silver coins like American Eagles or Canadian Maples or bars. Store them securely, ideally in a safe or a safety deposit box. This is a hedge, not a lottery ticket. You're protecting purchasing power, not gambling. If you prefer liquidity, silver ETFs like SLV or PSLV give you exposure without the hassle of storage. Just know that ETFs come with management fees and counterparty risk. You don't own the metal, you own shares of a fund that owns the metal. Read the fine print. If you're more aggressive, silver mining stocks offer leverage to the silver price. When silver goes up 10%, miners can go up 30% or more because their profit margins expand. But they're also riskier. Look at companies like First Majestic Silver, Pan American Silver, or Hecla Mining. Do your research. Check their balance sheets, production costs, and reserve quality. And if you're speculating, silver futures and options exist. But unless you know what you're doing, stay away. Leverage cuts both ways. You can make a fortune or lose everything in a day. One more thing, dollar cost average. Don't try to time the bottom. Silver is volatile. It can swing 10% in a week. Spread your purchases over time. Buy a little each month. Smooth out the ups and downs. And whatever you do, don't chase FOMO. Don't bet the farm. This is a strategic play, not a gamble. Let's step back and see the forest for the trees. Silver hitting $64 isn't just a headline. It's a signal that something deeper is shifting in the global economy. We're moving from a world of abundant resources and cheap money to a world of scarcity and hard assets. We're transitioning from fossil fuels to renewables, and that transition runs on silver. We're seeing cracks in the financial system, cracks in the dollar's dominance, cracks in the trust people have in paper assets. And when trust erodes, people go back to what's real, what's tangible, what has value because it's scarce and useful. Silver is both a relic of the past and a metal of the future. It's been money for millennia, and now it's the backbone of modern technology. The 1980 squeeze was a blip, a speculative mania that ended in tears. What we're witnessing right now could be the start of a decade-long supercycle. Will silver hit $100, $150? Nobody knows for sure. But the fundamentals say we're not done yet, not even close. All right, that's the full story. Silver just hit $64, a 44-year high, and the parallels to 1980 are striking, but this time, the fundamentals are on our side. If you found this valuable, smash that like button. It helps more people see this content. Drop a comment below. Tell me, are you buying silver? Are you waiting? What's your move? I read every single comment. And share this video with someone who needs to hear it. Your friends, your family, anyone trying to navigate this wild market. Before you go, make sure you're subscribed, because next, I'm breaking down something even bigger. How China's $1 trillion trade surplus proves Trump's tariffs backfired. You do not want to miss that. It's going to blow your mind. Until next time, stay informed, stay strategic, and remember, the market rewards those who do their homework. I'll see you in the next one.